Good morning, children. This is SP Prasanna Lakshmi, TSMS Ahmedabad Principal. Today, children, we are back with accounts. Commerce is divided into two theory part and accounts part. As we have completed two lessons in commerce, again we are back to accountancy as we need to complete both the parts like theory and accountancy simultaneously. Already we have completed. See, once I'll revise what all we have completed in accountancy. Like introduction part is over, concepts, conventions also we have completed. Golden rules we have learned. What for we have learned golden rules? To write, how to write in accountancy books, how to write the transactions, what all we have to write, what are the rules. So today, very interesting topic like first step in accounting circle we are going to learn. That is journal entries. What it is? Journal entries. So how to write using the golden rules. Now today's presenter is going to explain you as he has well experience like 14 years of experience teaching junior college, degree college for 7 years, and also he is with the TSMS family for 7 years, and he is presently working as a PGT Commerce in Telangana Model School, Chowdaram, Jengam district. So, children, what you have to do is, as accountancy means, every time you have to maintain a long register, you have to keep ready your pencil, scale, pen, everything, so that you can note down. And in accountancy means not much calculations, but you need to learn the formats. Formats are very, very important. Once you know the format, accountancy is very easy, and it is scoring also. So, children, you need to show interest and learn very well. So, first step we are going to learn in accountancy. So, be ready for that. So, over to you, sir. All the best. Thank you.
Thank you, madam.
Sir, share the screen and start.
Good morning to AD sir, JD sir, all the principals, teachers, viewers, and my dear students. I am thankful to Additional Director sir, Joint Director sir, and all the webinar team members for conducting this webinar session to continue the education of our children in this pandemic situation. So, myself, Stalin BABU, PGT Commerce, I'm working at TSMS Chowdaram, Jengam district. My coordinator is SP Prasanna Lakshmi Madam, Principal TSMS Aminabad, Warangal Rural District. So today's my topic is journal from the accountancy. I think so far you covered 3 to 4 topics from the accountancy. Today you are going to learn an important topic from the accountancy, that is journal. So let us going into the topic. Let us going into the topic. First, we see the learning objectives. So from today's session, you are going to learn meaning of journal, journalizing, and journal entry. So at the end of the session, you will be able to define journal, journalizing, and journal entry. You are able to draw the format of journal and explain the columns of journal. And you know the steps of journalizing, and finally you are able to do the problems on journal entries. So what is journal? You know, every businessman starts business with aim of earning profit. So whatever the size of the business, it may be big business concern or it may be small business concern. Every business has many deals with many transactions like purchases, sales, purchase returns, sales returns, cash receipts, cash payment, and loan advance given and loan advance taken, acquisition of assets and disposal of assets. So every business is dealing with this kind of transactions. So at the end of the month or at the end of the quarter or at the end of the year, he has to know whether he earned profit or incurred loss. So how he conclude? So he has to maintain a record book and enter the business transactions in that record book. Then only he know whether he earned profit or incurred loss. So for this, he has to maintain a record to write the day-to-day activities transaction in the book. So for this, he maintained a day book or a day record. So this day book is in accounting terminology, we call it as journal. The term journal means a daily record. It is nothing but a book. It is a book in which the business transactions are recorded in chronological order. So what is mean by chronological order? Chronological order means as and when the transaction taken place. So we record the business transactions in journal book according to the date wise. That means, for example, if you take the transactions in the month of January, first we record the day one transaction. That means date 1, January 1. So next January 2, third, fourth day, fifth day, like that. So in this way, we record the business transaction in the journal. It is the most important book. So this journal book is also called as book of prime entry or book of original entry. So why we call it as book of prime entry? If you observe accounting cycle, we post the business transactions like purchases, sales, purchase returns, sales returns with the help of source document like invoices, bills. With the source document, we are primarily entering this transaction in the book journals. We are primarily entering the book journal. So it is called as book of prime entry. So we are primarily entering the transaction in the journals. That's why it is called book of prime entry. And it is also called book of original entry. So why we call it as book of original entry? Because so if you observe the accounting cycle, it starts with source document. From source document, we enter into the journal. With the help of journals, we prepare the ledgers. With the help of ledgers, we prepare the trial balance. And with the help of trial balance, we prepare the financial statement. That means before or further entering into the other books like ledger, trial balance, financial statements, we are entering in the journal. That's why it is also called book of original entry. Journal is nothing but a daily record. It is a book in which we record the business transaction in chronological order. It is also called book of prime entry or book of entry. So let us see the meaning of journalizing. So what is mean by journalizing? Journalizing is nothing but a process of recording business transactions in journal is called journalizing. So journalizing is nothing but it is a process. So in this process, we record a transaction. So here we analyze the given business transaction and we have to follow the double entry bookkeeping system and applying the classification of accounts and accounting principles to record the business transaction. So this process is called the process of recording business transactions in journal is called journalizing. Journalizing is nothing but a process. We follow the process to record the business transaction. So this process is called journalizing. The process of recording a transaction in journal is called journalizing. Points to be considered before journalizing. So before journalizing, you have a lookout the following. As you know, every transaction has two aspects. As you know, every transaction has two aspects. So where you learn this one? Yes, you learn in the topic double entry bookkeeping system. What is meant by double entry bookkeeping system? There we learn every business transaction has two aspects. So, for example, if you went a shop and purchase a notebook worth rupees 20 from the shopkeeper. So what happened there? You receive a notebook worth 20 rupees and you are giving amount 20 rupees to the shopkeeper. That means you are receiving a benefit and you are giving a benefit. That means in every transaction, there are two aspects. One is receiving benefit, another one is giving benefit. So, in accounting terminology, the receiving benefit is called debit and the giving benefit is called credit. So, that is debit and credit. There are two aspects. One is debit, another one is credit. The debit and credit aspects are to be recorded in the journal based on the principles of double entry system. What is the principle of double entry system? What is the rule of fundamental rule of double entry system? For every debit, there is a corresponding value of credit. For every debit, there is a corresponding value of credit. That means the value of debit always equal to the value of credit. So before entering to the journal topic, have a look on classification of accounts and rule of debit and credit. If we know this information, then only you are able to do the journal. So without this knowledge, it is difficult to solve the problem. If you know the classification of accounts and rule of debit and credit, it is very easy to do the problems in journal. If you know this information, it is very easy to understand. So have a look on the classification of accounts and rule of debit and credit. It is most important for the intermediate first year student. So our total upcoming chapters depend on this information. So let us see types of accounts. You learn there are three types of accounts. One is personal account, second, real account, third, nominal accounts. Accounts are classified into three types: personal account, real account, and nominal account. Let us see the first one. What is the first one? Personal accounts. Personal accounts, it's related to persons. Here, persons are again classified into three types. They are natural person, artificial person, and representative person. So personal account again classified into three types. First one, natural person. What is mean by natural person? Natural persons means like you and me. So we believe that we are the creatures of God. So the creatures of God like you and me. Example, Ramu, Sita, Geeta, Lata, Ramesh, Suresh, like that. So second one is artificial person. What is the first one? Natural person. Second one, it is opposite to natural. What is the opposite for natural? Artificial. So the second account is artificial person. So personal account classified into three types: natural person, artificial person. So what is mean by artificial person? Artificial person means the persons created according to the laws or according to the acts are called artificial persons. So examples like banks. Banks are created according to the Banking Regulation Act. So banks, examples, State Bank of India, ICICI, HDFC, Union Bank, and universities. Example, Kakatiya University, Usmania University, Shatavahana University, and institutions like Telangana Model School. These are the examples of artificial person. So third one is representative personal account. So it deals with outstanding expenses, outstanding income. Outstanding expenses, that means expenses payable. Outstanding income means income receivable. So accounts are classified into three types: personal account, real account, nominal account. Personal account again classified into three types: natural person, artificial person, and representative person. So what is the second account? Real account. What is the second account? Real account. Real account deals with cash assets. Assets like land, building, machinery, furniture, computer, etc. So real account deals with cash and assets. And the third one and the final one is nominal accounts. The third one is nominal accounts. Nominal accounts deals with two sets. What are they? One is expenses and losses. Another one, incomes and gains. So there are three type of accounts: personal account, real account, and the nominal account. For these three accounts, we have rule for debit and rule for credit. Let us see the rule of debit and credit for these three accounts. Let's start with first one. What is the first one? Personal account. The principle of personal account is debit the receiver, credit the giver. What is the rule? Debit the receiver, credit the giver. The receiver account should be debited and the giver account should be credited. So you went to a shop and purchased a book. That means you are receiving the book. So your account is debited. The shopkeeper is giving the book. So his account is credited. So the principle of personal account is debit the receiver, credit the giver. Second one, real account. Real account, the principle of real account is debit what comes in, credit what goes out. So here cash asset. When the cash assets coming into the business, it should be debited. When the cash and asset going out of the business, it should be credited. Okay. The final one, nominal account. So nominal accounts deals with expenses and losses and incomes and gains. The rule of debit and credit for nominal account is debit all the expenses and losses, credit all the incomes and gains. So this is the most important table for account student. So you have take a A4 size paper and write this table and go through this table daily. It will help you to do the problems in journal. Let us see the steps in journalizing. In journalizing, in step 1, students should clearly understand the transaction. So students should clearly understand the business transaction. Identify the two aspects or accounts affected. So what are the two accounts affected by the transaction? One is receiving benefit, another one is giving benefit. That is debit and credit. In step 3, you have to ascertain the nature of the accounts involved. In step 2, we identify the two accounts. So here we have to identify the nature of the account, whether it belongs to personal account, whether it belongs to real account, whether it belongs to nominal account. In the step 4, you have to ascertain which rule of debit and credit is applicable for each of account involved. In the step 5, you have to ascertain which account to be debited and which account to be credited. Finally, we have to post the transaction, enter the transaction in the journal book. Before going to the problem, let us see topic journal entry. Meaning of journal entry. What is mean by entry? Entry is nothing but writing in a book. Writing in a book. Journal entry is nothing but the entries made in the journal are called journal entry. Journal entry means the entries made in the journal book are called journal entries. Let us see the format of journal. The format of journal consists of 5 columns: date, particulars, LF, debit amount, credit amount. Format of journal consists of 5 columns: date, particulars, LF, debit amount, credit amount. The details of each column of journal. What is the first column? The date column. In the date column, we enter the date of the transaction is recorded in this column. We write the date of the transaction, when the transaction is taken place. In this column, first we write the year. Under the year, we write the month, followed the date. Every time we need not to write the year. First transaction, we write the year. For the following transaction, we enter only month and day. The second column, particulars column. It is an important column in the journal. In the particulars column, we record the name of the accounts which are affected by the transaction here. So let us see the example. So in the particulars column, first, in the particulars column, in the first line, we record the name of the account debited followed by DR. Here, DR represents this account is debited. In the first column, the first line, we enter the name of the account debited. In the second line, we have to leave a little space here and write TO2 and write the name of the account credited. So in the first line, we write the name of the account debited, and in the second line, you leave some space and write EO2 and the name of the account created. In the third line, you write the narration that is starts with being. Narration is nothing but a brief description of the transaction. Third column is ledger folio. LF means ledger folio. This column is meant for writing the page number of the ledger on which the account concerned appear. After preparing the journal, we prepare the ledger. So when we are preparing the ledger, we write this LF number. As a student, we need not to write anything in LF column. In real-time accounting only, we write the LF column. As a student, we need not to write anything in LF column. So debit amount column. Fourth one is debit amount column. In this column, the amount of debited is entered. And finally, in the credit amount column, we enter the amount of credited here. So there are 5 columns: date, particulars, LF, debit amount, and credit amount. Dear students, let us go into the problems on journals. So everyone, open your textbooks. Open page number 61, third bit problems. Page number 61, third bit problems. First one. Mr. Anil started business with cash 75,000 on 1st January 2019. So we are going to solve this problem. So everyone take a single roll notebook, a long notebook, and draw the format of journal in full length page. Full length page, to draw the format of journal and write the heading on the top of the format. Journal entries in the books of Mr. Anil. What are the columns? Date column, purchase column, LF column, debit amount column, and credit amount column. You should allocate more space for particulars column. Here, the main entry is recorded in particulars column. So you take more space for particulars column. LF column, you take little space. Why? Because we are not going to enter anything in LF column. Okay. So let us see the first transaction. Mr. Anil started business with cash rupees 75,000 on 1st January 2019. Mr. Anil started business with cash rupees 75,000 on 1st January. Let us understand the given transaction. Here, Anil is starting the business. So what is coming into the business? Cash. So when you are journalizing, you have to keep in mind, you have to think on behalf of the business, not on behalf of owner. So what is coming into the business, what is going out of the business is important to us. Why? Because business has separate entity. So we think on behalf of the business. Here, Mr. Anil started business. So he is the owner. He is providing cash 75,000 to the business on 1st January 2019. So now identify the two accounts. Dear students, you have to answer these questions through your chat box. So identify the two accounts which were involved in this transaction. So here, what is coming into the business? Cash. Cash is coming into the business. Who is the provider of cash? Mr. Anil. So the two accounts affected is, one is cash account, another one is Anil account. The two accounts involved here, cash account, Anil account. So we identified the two accounts. Now we have to see the nature of the account. We have to find out the nature of the account. So what is the first account? Cash account. Then tell me, what is the nature of cash account? Is it belongs to personal account, real account, or nominal account? Is it belongs to personal account or real account or nominal account? Belongs to real account. Cash belongs to which account? Real account. Then what is the principle of real account? Debit what comes in and credit what goes out. So here cash is coming into the business. So cash account should be debited. What is the second account? Anil account. So Anil belongs to personal account or real account or nominal account? Good. He belongs to personal account. Natural person. So what is the principle of personal account? Debit the receiver, credit the giver. Here, Anil is the giver of the cash to the business. So his account should be credited. Which account debited? Cash account is debited and Anil account is credited. Whenever the owner providing cash to the business, instead of writing his name, we write his capital account. So the entry is cash account data to Anil's capital account. The entry is cash account data to Anil's capital account. First, we have to write date in the date column. So first we write the year 2019, January 1st. So in the first line, but in particular column, in the first line, we have to write the name of the account debited. Here, the name of the account debited is cash account followed by DR. This DR represent this account is debited, and we write the 75,000 amount in the debit column against debit account. Here we should not write anything. We make a small hyphen against cash account here in the credit column. And in the second column, leave some space and write TO2 and the name of account created. What is the name of the account created here? Anil's capital account. So the entry is cash account data and Anil's capital account. Here, 2 represent this account is created. So the amount is posted in the credit amount column against credit account. So here in the debit amount column, we make a small hyphen. So in the third line, we write the narration of the transaction. Generally, it starts with being. The narration is being business started with the cash. It is description of the transaction. Narration is nothing but description of the transaction. So the entry is cash account data to Anil's capital account. Let us see the next one. 2019, January 2nd. Cash sales rupees 10,000. Cash sales. Sales means sale of goods. So here we are selling the goods and we are receiving the cash. So what is coming into the business? Cash. What is going out of the business? Goods. So cash and sale. Sale is a income to the business. Sale is a income to the business. Purchase is a expenditure to the business. So here the two accounts affected are cash account, sales account. What is the nature of cash account? Is it personal, real, or nominal? Yes, it is real account. The principle of real account is debit what comes in, credit what goes out. Here, cash is coming into the business. So cash account should be debited. What is the second account? Sale. It is an income to the business. So what is the nature? Income comes under nominal account. Income comes under nominal account. What is the principle of nominal account? Debit all expenses and losses, credit all incomes and gains. Here, sale is a income to the business, so it should be credited. So the entry is cash account data to sales account. The entry is cash account data to sales account. You have to, here, I am using a special, every time I am using a separate slide, but you need not to draw the separate format for every transaction. You write in your notebook, one after one. Second time, here I mentioned the year, but you need not to write the year in the date column. You just write the month and day of the transaction. In the factors column, name of the account debited and name of the account credited. So what is the name of the account debited here? Cash account. Cash account data to sales account. What is the entry? Cash account data to sales account. What is the amount? 10,000. Right? 10,000 amount in debit column against cash account, and write 10,000 against sales account in the credit column. So the narration is being goods sold for cash. Being goods sold for cash. Next, 2019 January 5, goods purchased for cash rupees 12,000. Here we are purchasing the goods for cash. That means what is coming into the business and what is going out of the business here. Here, goods are coming into the business and cash is going out of the business. So the two accounts affected are purchase account and cash account. Purchase is a sales to the business, expenditure to the business. So expenditure. So it is an expenditure. So it comes under which account? Personal account, real account, or nominal account? Yes, it belongs to nominal account. It belongs to nominal account. What is the principle of nominal account? Debit all expenses and losses, credit all incomes and gain. Here, purchase is an expenditure. So expenditure, so this account should be debited according to the principle. So cash account. Cash account is a personal, real or nominal? Yes, it is comes under real account. What is the principle? Debit what comes in, credit what goes out. Here cash is coming into the business or going out of the business? Yes, here cash is going out of the business. So cash account should be created. So the entry is purchases account data to cash account. The entry is purchases account data to cash account. Write the date in the date column and entry in the purchase column. Purchases account data to cash account. What is the amount? 12,000. Write 12,000 in debit amount column and write 12,000 in credit amount column against their account. What is the narration? Being goods purchased for cash. Being goods purchased for cash. See the next one. 2019 January 7, goods sold on credit to Rahim. Here we are selling the goods to Rahim. In the previous transaction, it is a cash transaction. Here it is a credit transaction. That means we are selling the goods. The goods are going out of the business. Who is the receiver of the goods? Rahim. So he is not paying any amount to the business. In the future, we have to receive the cash from Rahim. So the two accounts affected are Rahim account and sales account. Rahim account and sales account. So what is the nature of Rahim account? Is a personal account, natural person. So what is the principle of personal account? Debit the receiver, credit the giver. Here he is receiving the goods. So his account should be debited. Sale, it is an income to the business. Purchase is expenditure. Sale is an income. Income means it belongs to nominal account. Nominal account deals with expenses and losses and incomes and gains. So it is a nominal account. The principle of the nominal account is debit all expenses and losses, credit all incomes and gains. So here sale account is credited. Here sale account is credited. So what is the entry? Rahim account data to sales account. What is the entry? Rahim account data to sales account. Write the date of the transaction in date column, January 7. Rahim account data to sales account. Being goods sold on credit to Rahim. What is the amount? 20,000. Write 20,000 in debit amount column against debit account and write 20,000 in credit amount column against sales account, that is credit account. See the next transaction. On January 8, sale of goods rupees 20,000. Sale of goods rupees 20,000. Here we are selling the goods. That means goods are going out of the business. Cash is coming into the business. So cash is coming into the business, goods are going out of the business. The two accounts affected here, cash account and sales account. Cash account and the sales account. Then what is the nature of the account? Cash belongs to personal, real or nominal? Yes, it belongs to real account. Then what is the principle? Debit what comes in, credit what goes out. Here cash is coming into the business. So cash account should be debited. So cash belongs to real account. Cash is coming into the business. It should be debited. Sale is an income. Income means it belongs to nominal account. The principle of nominal account. Debit all expenses and losses. Credit all incomes and gains. Here it is an income. It should be credited. So what is the entry? Cash account data to sales account. Cash account data to sales account. What is the date? January 8. Write January 8 in date column. Write the entry. Cash account data to sales account. Cash account data to sales account. What is the amount? 20,000. Write 20,000 in debit column against debit account. Write 20,000 in credit column against credit account. So write the description. What is the description? Narration: being goods sold for cash. Being goods sold for cash. On 2019, January 9, wages paid rupees 5,000. So here we are paying the expenditure, that is wages. So we are paying the wages to the laborers, rupees 5,000. What happened here? Here cash is going out of the business. We are paying the wages. Wages is an expenditure to the business. So the two accounts involved here are wages account and cash account. Wages account and cash account. So wages. Wages is an expenditure to the business. It is an expenditure. So it belongs to which account? Yes, it belongs to nominal account. The principle of nominal account. What is the principle? Debit all expenses and losses. Here wages is an expenditure. So wages account should be debited. Cash. Cash comes under which account? Personal, real or nominal? Yes, it belongs to real account. The principle of real account. Debit what comes in, credit what goes out. Here cash is coming into the business or going out of the business. We are paying the payment. Payment means expenditure. It is going out of the business. Whenever you see the word paid, paid means the cash is going out of the business. So cash account should be credited. So the entry is wages account data to cash account. The entry is wages account data to cash account. Let us enter in the journal. So what is the date? January 9. January 9. The entry is wages account data to cash account. Wages account data to cash account. What is the amount? 5,000. So write 5,000 in debit column against debit account and write 5,000 against credit account in the credit column. So the narration is being wages paid. Being wages paid. 2019, January 10. Cash deposited into bank. Transaction is cash deposited into bank. What happened here? Here, We are depositing. The business is depositing cash into the bank. Who is the receiver? Bank. What is going out of the business? Cash. The two accounts involved here, bank account and cash. So, what is the nature of bank account? Is it personal, real, or nominal? Yes, it belongs to personal account. In the personal account, there are three types: natural person, artificial person, representative. So, banks belongs to artificial person. So, bank is a personal account. The principle of personal account is debit the receiver, credit the giver. Here, bank is the receiver of the cash. We are depositing the cash into the bank. That means bank is the receiver. So bank account should be debit. And the second account is cash. Cash comes under real account. So according to the real account, cash debit what comes in, credit what goes out. Here cash is going out of the business. So cash account should be credited. So the entry is bank account data to cash account. The entry is bank account data to cash account. Right, what is the date? January 10th. January 10th in date column. What is the transaction? What is the journal entry? Bank account data to cash account. Right, in purchase column, bank account data to cash account. What is the amount? 8,000. Right, 8,000 in debit amount column against debit account. You should not write anything here. So make a small hyphen. And what is the credit transaction? Cash account. So it is a cash account. So you should not write anything here. So make a small hyphen and write the amount in the credit column, rupees 8,000. What is the narration? Being cash deposited into bank. Being cash deposited into bank. 2019, January 13, cash paid to Mahesh, rupees 6,000. So here we are paying cash to Mahesh. So what is happening here? We are paying cash. Who is the receiver? Mahesh. What is going out of the business? Cash. The two accounts involved here, Mahesh account and cash account. So now you easily identify. Mahesh belongs to which account? Personal account. Belongs to personal account, natural person. So debit the receiver, credit the giver. Here, Mahesh is receiving cash. So he's the receiver. So his account should be debited. Cash is going out of the business. Cash comes under real account. The principle, according to this principle, real account, debit what comes in, credit what goes out. Here, cash is going out of the business. So cash account should be credited. So the entry is Mahesh account data to cash account. The entry is Mahesh account data to cash account. What is the amount? 6,000. Right, 6,000 in debit amount column, 6,000 credit amount column. Date is January 13. January 15, machinery purchased for cash rupees 12,000. Here we are purchasing machinery. So what is coming into the business? Machinery. What is going out of the business? Cash. So the two accounts involved is machinery and cash. You have a doubt, sir, here we are purchasing machinery. Why don't we take the purchase account? So purchase account, we take the purchase account whenever we purchase the goods. Purchase the any asset account, asset account should be considered. Here, what we are purchasing? Machinery. So it is an asset. Whenever we purchase an asset, asset account should be debited. So here the two accounts involved are machinery account and cash account. So machinery belongs to which account? Real account. We know real account deals with cash assets. So machinery is real account and cash also real account. Both comes under real account. So what is the principle of real account? Debit what comes in, credit what goes out. Here, machinery is coming into the business, cash is going out of the business. Machinery is coming into the business, cash is going out of the business. So the entry is machinery account data to cash account. So the entry is machinery account data to cash account. So what is the date of the transaction? January 15. Entry is machinery account data to cash account. What is the amount? 12,000. Write 12,000 in debit amount column against machinery account, against debit account, and write 12,000 in credit amount column against credit transaction. What is the narration? Being machinery purchased for cash. Being machinery purchased for cash. Purchase goods from Anitha, rupees 5,000. Here we are purchasing goods from Anitha. Is it cash transaction or credit transaction? It is credit transaction. How it is credit transaction? So whenever we purchasing the goods, if in the transaction he mentioned the name of the supplier in the absence of cash information, then it is treated as credit transaction. Here, purchase goods from Anitha. Anitha is the supplier of the goods. But here we are not paying any cash. There is no information regarding the cash. This 5,000 represents the value of goods. It is not a cash. Then we are purchasing the goods. That means cash is, we are purchasing the goods from Anitha, purchase account and Anitha account. The two accounts affected are purchase account and Anitha account. Purchase account is an expenditure to the business. So it is an expenditure. So it belongs to nominal account. According to the nominal account, debit all expenses and losses. So its purchase account is debited. Anitha is a person, natural person. So according to the personal account, debit the receiver, credit the giver. She is the giver of the goods to the business. So her account should be credited. So the entry is purchase account data to Anitha account. The entry is purchases account data to Anitha account. What is the date? January 18. Entry purchases account data to Anitha account. What is the amount? 5,000. So 5,000 entered in debit column against debit account and rupees 5,000 entered in credit column against credit account. What is the narration? Being goods purchased on credit. Being goods purchased on credit. January 10, 20, cash received from Ramya. So we are receiving cash from Ramya. What is coming into the business? Cash. Who is the giver? Ramya. So the two accounts involved are cash account and Ramya account. Cash account belongs to real account. Ramya belongs to personal account. What is the principle of real account? Debit what comes in, credit what goes out. Here cash is coming into the business, so cash account should be debited. Ramya is a person, natural person. So debit the receiver, credit the giver. So her account should be credited. So the entry is cash account data to Ramya account. Write the entry cash account data to Ramya account. Write 3,000 in debit amount column, 3,000 in credit amount column. Being cash received from Ramya. Paid commission rupees 1,500. Here payment means it is an expenditure. Here commission is an expenditure. They are paying commission. That means cash is going out of the business. So the two accounts involved here are commission account and cash account. So commission and expenditure. So according to the nominal account, expenditure is debited. So commission account is debited here. Cash is going out of the business. So cash account should be credited. So the entry is commission account data to cash account. The entry is commission account data to cash account. Date January 22. Entry is commission account data to cash account. 1,500 in debit column, 1,500 in credit column. Being commission paid in cash. Narration is being commission paid in cash. Paid for postage and stationery. It is also expenditure. So we are paying for postage and stationery. That means postage and stationery is an expenditure to the business. Cash is going out of the business like wages. So postage and stationery account should be debited. According to the nominal account principle, debit all expenses and losses. So postage and stationery account is debited. Here cash is going out of the business. So cash account should be created. So the entry is postage account data to stationery account. Postage and stationery account data to cash account. What is the date? January 24. What is the amount? 500. Right? 500 in debit column, 500 in credit column. Being postage stationery paid. Cash drawn from bank for personal use. So personal use means the use of owner. So owner is receiving the cash and the bank is the giver of the cash. So the two accounts involved here are drawings account and bank account. Drawings means it is used by the owner. Who is the owner? Anil. So one account is Anil account and the other one is bank account. So both are comes under personal account. Natural person, artificial person. So here, who is the receiver? Anil. So debit the Anil account. And who is the giver of the cash? Bank. So according to the personal account, create the giver, bank account is created. The entry is owner's capital account. Who is the owner? Anil. Sorry, Anil's drawings account. Who is the owner? Anil. Anil's drawings account data to bank account. The entry is Anil's drawings account data to bank account. So whenever the owner withdraw cash for his personal use, instead of writing his account, we write his drawings account. When owner providing cash, instead of his name, we write his capital account. Whenever owner withdraw cash, instead of writing his account, we write his drawings account. Here the entry is Anil's drawings account data to bank account. Rupees 7,000 in debit column, 7,000 in credit column. Being cash withdrawn for personal use. Received rent. So received, the what received tells us it is an income to the business. So rented is an income here. So cash is coming into the business. According to the real account, cash, when cash coming into the business, cash account is debited. Rent is an income. So according to the nominal account, it is credited. So the entry is cash account data to rent account. Cash account data to rent account. What is the date? January 30. Cash account data to rent account. 1200 in debit amount column, 1200 in credit amount column. Being rent received in cash. Being rent received in cash. Dear children, see the question number 3 in page number 62. Here I am taking few transactions to explain the new thing. Akbar started business with cash 50,000. So like that, cash is coming into the business. Akbar is the giver of the cash. So the entry is cash account data to Akbar's capital account. Cash account data to Akbar's capital account. In 2019, Akbar started a business means he's providing cash to the business. So the entry is cash account data to Akbar's capital account. 50,000 in debit amount column, 50,000 in credit amount column. Sold goods to Mahesh. Here we are selling the goods to the Mahesh. So Mahesh is the customer to the business. Whenever the customer name is given, in the absence of cash information, it is treated as credit transaction. So we are selling goods to the Mahesh. Here we are not receiving any cash. In future, we have to receive cash from the Mahesh. So the two accounts involved here is Mahesh account and sales account. Sale is an income to the business. Mahesh is a personal account. Debit the receiver, credit the giver. He is the receiver of the goods. So his account should be debited. Sale is an income. According to the nominal account principle, it is credited. So the entry is Mahesh account data to sales account on March 6, 2019. The entry is Mahesh account data to sales account. The amount is 35,000 in debit column, 35,000 in credit column. Being goods sold on credit. Bought goods from Radhika. Bought means purchase. Purchasing goods from Radhika. It is also credit transaction. Here he mentioned name of the supplier. There is no information regarding the cash. These 25,000 belongs to the worth of goods. It is not information regarding the cash. So bought goods from Radhika. So the two accounts affected here are purchase account and Radhika account. Purchase and expenditure according to the nominal account principle, it is debited. Radhika is a personal account. Debit the receiver, credit the giver. She is the giver of the goods. So our account should be created. So the entry is purchases account data to Radhika account. Right? What is the day? March 9. Purchase account data to Radhika account 25,000, 25,000. Being goods purchased done, credit. On March 15, Mahesh returned goods 5,000. So Mahesh is returning the goods. That means previously we sell the goods to the Mahesh. Now he is returning the goods. It is a sales return. Who is the giver of the goods? Mahesh. So sale is an income. Here we are reducing the our income. So it should be debited. Sales return account is debited here. Mahesh is the giver of the cash. So his account should be created. So the entry is sales returns account data to Mahesh account on March 15. The amount is 5,000 in debit amount column and 5,000 in credit amount column. So the entry is sales returns account data to Mahesh account. Returned goods to Radhika. Here we are returning goods to the Radhika worth rupees 2,000. So that means previously we purchased from Radhika. Now we are returning the goods. Who is the receiver? Radhika. So what is going out of the business? Goods. So the two accounts involved are Radhika account and purchase return account. Radhika is the person, natural person. Debit the receiver, credit the giver. She is the receiver. So her account is debited. So purchase in expenditure is debited. When we are reducing the expenditure, it should be credited. So the entry is Radhika account data to purchases returns account. So what is the date? March 22. Radhika account data to purchases returns account. What is the amount? 2,000. 2,000 in debit amount column and 2,000 in credit amount column. What is the narration? Being goods returned to Radhika. Being goods returned to Radhika. Goods withdrawn for domestic use rupees 5,000. Domestic means personal use. That means again the owner is utilizing the goods. So his account will be debited. Drawings account data to purchase account. Why we write purchase? The goods comes when we purchase the goods into the business. So purchase account, the expenditure should be reduced. So the accounts involved is drawings account and purchase account. So whenever owner withdraw goods, instead of writing his account, write his drawings account. Here we are reducing the purchases. So purchase account is created. So the entry is Akbar's drawings account data to purchase account. What is the day? March 25. What is the amount? 5,000. Write the 5,000 in debit amount column, 5,000 in credit column against credit account. Being goods withdrawn for domestic use. Let us see compound entry. What is meant by compound entry? There are two types of entries, simple entry and compound entry. In entry, there is a one debit and one credit. It is called simple entry. So far, we see the simple entry, one debit, one credit. So in compound entry, there are more than one debit or credit will be there. Let us see one compound entry. So 2019 March 27, cash received from Anand rupees 3,800 and discount allowed 200. Here, cash received from Anand. So what is coming into the business? Cash and rupees and discount allowed 200. We are receiving 3,800 from the Anand and we offered a discount. We allowed discount him 200. So the here cash account is involved. So cash account is a personal account, real account. What is the principle of real account? So three accounts involved here is cash account, discount allowed account, and Anand account. So cash account, discount allowed account, and Anand account. So cash is coming into the business. So cash account should be debited. So discount allowed is an expenditure to the business. So according to the nominal account, it is debited. Anand is a personal account. According to the personal account, credit the giver. So here three accounts are involved. Cash account, discount allowed account, and Anand account. So the entry is cash account data, discount allowed account data to Anand account. How much cash we received? 3,800. How much discount we allowed? 200. Cash is a real account, so debited. Discount allowed Nominal account is an expenditure to the business. We are offering discount to the Anand. So it is an expenditure. So 200 to Anand account. He is the giver of the cash. So his account, we should enter 4,000 in the credit amount column. We submit 3,800 and 200. The total is 4,000. So we have to receive 4,000 from Anand, but we received 3,800 and we allowed a discount 200. According to the double entry system, the total value of debit always equal to the total value of credit. So we have to write 4,000. Sum all the debit one. Here 3,800 and 200. The total 400 should be written in the credit column. Being cash received from Anand and discount allowed to him. 2019 March 29, cash paid to Raman 4,900 and discount allowed by him 100. Here we are making payment to Raman. So the three accounts involved. Who is the receiver of the cash? Raman. So Raman is a personal account. So what is going out of the business? Cash. So discount allowed by him. He is allowing discount to us. That means it is discount received. He given in indirect speech. We should understand the given transaction. So here the three accounts involved here is Raman account, cash account, and discount account. So Raman account is personal account. Debit the receiver. He is the receiver of the cash. So his account should be debited. Cash, credit what goes out. Here cash is going out of the business. So cash account is created. So here discount received is an income to the business. According to the nominal account principle, create all incomes and gains. So it is created. So the entry is Raman account data to cash account to discount received account. What is the date? March 29. Raman account data to cash account to discount received account. So what is the cash going out of the business? 4,900. What is discount received? 100. The total of these two is 5,000 should be written on debit amount column against Raman account. If you observe these two transactions, there is one in debit and two in credit. One aspect in the debit, two aspects are credit. These type of transactions are called as compound entry. What we have learned today? Today we learned the definition of journal, journalizing, journal entry, and classification of accounts, rule of debit and credit, format of journal, and problems on journal. Test your understanding. What is journal? What is journalizing? What is journal entry? And fourth one, journalize the following transaction. 2019, March 1, started business with cash 25,000. On 3rd March, purchased computer 5,000. On 6th, purchased goods for cash. On 7th, purchased goods on credit from Mahesh. On 10th, purchased goods and paid by check rupees 7,000. Sold goods for cash 10,000. So let us understand the given transaction and analyze the transaction and make an entry in journal. So finally, I convey my thanks to our principal, Dr. P.V. Vidyadhar sir, for his support and encouragement. And also, I convey my special thanks to the coordinator, Prasanna Lakshmi ma'am and Madhuri ma'am to prepare the slides, PPT slides, and develop my presentation. Thank you, madam. Thank you for giving this opportunity. Over to Prasanna ma'am.
It was wonderful session. Very patiently, very clearly, you have explained all that. So we have to do is first you open your textbook, the page 61, and revise all the video what of the session you have seen. One entry you have to read the question, understand, try to write in the format in your notes. In that way, you have to learn the question. And next what you have to do is in the coming section, we'll be coming with 2 to 3 more problems. So before that, what is the question sir has given as a test your understanding? You have to complete that. Show to your teachers, your concerned school teachers, accounts teachers. So they'll help you if you have any more doubts. Or else you can once again, multiple times you want, you can rewind and see the session so that it will be very clear for you. So get ready, be prepared for the next session. We'll be back in 2 days with 2 more problems. Okay, children. Thank you, sir. It was really a wonderful class, sir.
Thank you, madam.